Right then, let's look at these charts in terms of the 3-day cycle to weed out our hot list for US CPI on Thursday. So the 3-day cycle, what is it? It's a phenomenon in the market that can be used to track the positioning over 3 days of longs or shorts, both. And with that build up of position, so if we're heavily long over the 3-day cycle, then our best bet is to counter trend that long 3-day cycle. So in the instance of the US dollar, DXY, if we look at this on a day count, if we go back to last Monday, Tuesday, Wednesday, Thursday, Friday, okay, the day count starts or it resets two ways, either at the top or the bottom of the week's range. So in this case, at the top of last week's range, when there is a close above the prior day's high. It could be a 15-minute candle close, it could be a 1-hour candle close, but we need a close above the high. I wouldn't go any lower than so I wouldn't go much lower than a 15-minute candle close because you really want that firm close. But you can experiment with lower time frame closes. But a day one will commence when you've got a close above the prior day's high and then a move back inside of the current day's range and below the prior day's high. And that will give you. Right, got distracted again there, sorry. So, trying to leave off where I was. We're talking about this 3-day cycle. So, Monday uh, starts the week. But in terms of the 3-day cycle, we're looking for what starts the 3-day cycle. So, day one is when we have a close above the prior day's highs at the high of the week. At the high of the week. Okay? Has to be at the high of the week or at the low of the week if we flip it on its head. Okay? This would be. I really confused myself now. Not hard to do. So we had here a close at the low of the week. That would be day one to start the process. Okay? So let's go back. So day one, day two. Day two is just day twos. Very easy. Just continues. Day one, day two, and day three. Now, day three, now note that even though we moved up, this wasn't at the low of the week. If this was at the low of the week and if we closed below that low down here and moved up, that would be day one. But this is day two, new day, new week, doesn't matter. You can move over to the next week. The next day is day three. But in this case, it's an inside day, hence the yellow candle. So it's inside of Fridays or Thursdays or whatever day that is, Friday's range. So it's an inside day, and therefore you move over to the next day to call it day three. So all of that becomes one day, and it's day three. Day one, day two, day three. Okay? And then on day three, whether it's at the high of the week or whether it was in the middle of the range of the week so far, day three simply turns to day one. Very simple. So that was day three of this prior day count. Let's have a look. Let's make sure it was. Maybe it wasn't. Maybe it was day two and turned into day one. So if we go back over here, right, we had a failed breakout. So what was the low of the week? The low of the week was on Wednesday. And on Thursday, we broke it with closes and we moved back up into the same day's range. And we closed, in fact, we closed really high up. Could have closed down there. It still would have been day one. But we happened to close up here. That's fine. High of the week. So day one, and then day two, day three. Oh no, it's an inside day. So we include it all as one day. Day three, right? And then day three turns to day one. So we're day one, we're day two, we're day three, and we turn to day one. Right? We would have turned to day one anyway because it was a close at the high of the week and a failed break out, but it was also day one naturally as part of the 3-day count. So day three turns to day one, day two, day three, day one, day two, day three. So why is all this day one, day two, day three business important? Well, if you follow the cycle, you can find trade setups easily. You can easily identify high probability trade setups based on the 3-day cycle. So we are coming into Thursday, US CPI day. Now, take a pause, look at that chart, study it. What day are we about to come into? Okay, if you've guessed it as day three, congratulations, pat yourself on the back because you're making progress towards identifying a high probability trade setup for Thursday. So on day three, now even though this was an inside day, remember that only counts if it's a day three. If it's supposed to be a day three, it's included. The next day is included as day three. It becomes a whole one big day like over here. But if it's in the middle of the day count, it's still counted as a day count. So day two, day three. So what can we expect on day three? Well, on day three, the market is going to do one of two things, right? It breaks out, corrects, and continues. So let's look at an example. The market will break out of a prior day's high or low. So in this case, it broke out of the high, it pulled back, and it's either going to continue or it's going to reverse and come into the current days and the prior days range and potentially continue lower. So it's either going to break out, pull back and continue, break out, pull back and reverse, or break out, pull back and go into a trading range, which is what we essentially saw on Wednesday today. So we saw the breakout, the pullback, and then we just moved into a trading range. So those are the three things the markets are going to do. All right, they're constantly, if they're not ranging, they're breaking out. They're breaking out of a recent high or low. Might be an internal structure high or low, might be a swing high or low, but they're breaking highs and lows. And when they're breaking highs and lows, that is triggering orders into the market, at markets. You can have aggressive orders coming in, passive orders that are sitting there like limit orders and so forth. But when you're breaking highs and lows, you're engaging trading, trades and investment. So that's how the markets move. And this 3-day cycle is going to help us narrow down the options and identify the high probability trade setups. So what can we expect? We can expect a breakout to the upside, a breakout to the downside, or we can continue in this sideways range. Highly unlikely on a high impact event day such as US CPI that we're going to have a sideways range day, inside day, or either that or just a choppy day either side of the prior day's highs and lows. But even still, we're breaking out. We're breaking out and pulling back. We're breaking out and pulling back. If we get that choppiness, that is still breaking out, pulling back, ranging, breaking out, pulling back, ranging. One of the three things that markets do. So what is the bias then for Thursday? Based on the day count, where this is day one, day two is expected to fall in line with the um, origin of the day count. So in this case, the origin of the day count is day one, because we've got peak formation up high. This is starting the new day count. Day one is the new day. So that triangle I'm just drawing there is just to highlight that it's it's peaked out, right? It's a topping pattern. So it's a V-shaped topping pattern. So that is the start of the presumed direction of this trend. So we've broken out, we failed, and we're expecting the reverse, right? So markets either break out, pull back and continue, or they break out, pull back, and potentially reverse. Now, because we've broken out and pulled back and established a day one count, the higher probability is the reversal. So breakout, pull back, and reverse. So we're looking for day two to continue with the downtrend of day one, which it did. It pulled back, right? And it's closing lower than the prior day's low. So therefore, it's in line with that direction, right? So it's the market has broken out, right? It's breaking out, it's pulling back, and it's continuing in that respect. Or if you look at it from the respect of the prior uptrend, it's breaking out, pulling back, and reversing. So day one, day two, we can expect, because we've reversed, or we've continued, we've trend traded, so we've continued with that trend. We've gone in the direction of the peak formation. On day three, more often than not, you get a correction towards the prior peak formation. So we're in anticipation of a move back in. Maybe not as far as or above these highs, but we'll be in anticipation. We're looking to buy the dip. So we might find that we're going to get a parabolic, fast move that doesn't come back on itself in Asia, potentially in London, most probably in the US, because just like the day count, it takes 3 days to build up. It can take 3 sessions to build up for the reversal. So we'll have Asia, potentially, we're doing whatever Asia's going to do, and then London perhaps coming lower, and then New York, and then maybe between London and New York, moving up into the shorts from London, and the gap time between London and New York, and then perhaps in New York coming lower, filling in the void in orders as the market moves up in that stop hunt in the gap time, and the market coming down and then setting up in maybe 3 pushes to the downside, setting up a bottoming pattern, breaking structure on the inside of that move for a parabolic burst up into day 1, day 2, day 3 shorts, and then boom, up we go. And that's what we're looking for. So that's what we're going to try and identify in the 3-day cycle. So we're going to go through these pairs and we're going to look for setups. We're going to do the day count, and then we're going to identify where we might have the higher probability trades for the US session. And we or maybe even London, potentially even Asia. I think we've even got something on the dollar yen, so we'll look at that first for Asia. Okay, so I hope that makes sense. And fire away any questions. If you've got any questions on the day count, I can do another video and do some run-throughs on that over the course of history on the charts. But let's move forward. So here we are on the dollar yen chart. And let's do the day count on this dollar yen chart. This was day 1, day 2, day 3. Day 1, day 2, day 3. Day 1, we're expecting day 2 to be in line with day 1. So that becomes day 1. And this becomes day 2. On day 2, we can expect a trend continuation. And that could see the price come down, maybe in Asia, maybe it's going to pop into these longs. And in doing so, maybe it would encourage buying activity from London. And maybe we'll start out the US session coming into those longs, and then maybe the parabolic move is going to come in the US session at some point for the continuation up. And therefore, we'll be monitoring Asia, how we're setting up over the course of these sessions for a move to the upside on day 2 in the US session. So day 1, day 2, day 2 longs, day 1 longs, day 2 longs. And then Friday, because we've waited long enough, maybe Friday is going to give us a day 3 shorting opportunity. As we come into day 3, Friday, day 3 for the parabolic move to the downside, of which we're going to look to short. And where that might come to, who knows, but we've certainly got some targets along the way to the downside. Now, on the other hand, that's not to say that day 2 is definitely going to continue with the trend. And what we could have, we may have, say, a failed breakout above the prior day's highs, setting us up for a day 1 into the close. This would become day 1, and then on Friday, maybe we get the downside continuation of this peak formation, this being day 1 and this now being day 2 over here, for a sell-off, which is probably well overdue, which is a likely scenario given how long we've been in the money already on the bid. So perhaps we're going to come up into last week's highs, taking traders up, thinking, well, we're going to continue up and up and up and up. And I've got a target of 144.50 for for the upside on a swing trade may not come to fruition. Perhaps tomorrow we're going to blow off, and it'll be a. We'll have to look for a. I mean, it depends if you want to be shorting going against the trend on day two. Is that going to give you a high probability setup? Is that going to give you an extensive run? Probably not. Not as likely as a day three sell-off because you've got all of that. But even still, we've got 3 days of longs in the market. Even though it's despite it's being despite us being where we are in the 3 day cycle. So day one, day two, day three, day one, day two, day three, day one, day two for a continuation upwards or a reversal, but we still have day one, day two, day three in terms of breakout trends. Day one breakout, um, closing above Friday's high. So longs are in the market, longs are in the market on Tuesday, longs are in the market on Wednesday. I mean, how many more consecutive days are we realistically going to get of longs chasing that trend? At some point, it's become too expensive and they'll look for better value elsewhere, and that will be our capitulation of the bulls, and so on. But on a day two reversal, they are so essentially what I'm saying is you might want to take it easy on a day two, trying to counter trend. You can get caught out, get stopped out. Um, you might want to take your money off the table sooner than holding on to that um, as if it was a day three. But we have got 3 day longs in the market in terms of breakouts, so we could see a heavy drop in that scenario. Had it only be, say, 3 days or 2 days of longs in the market, then perhaps it was a bit premature to be expecting a very strong sell-off. Okay, so those are the two possibilities out of three, which could just be sideways consolidation, unlikely on CPI day. Um, and then, so day two continuation trade to swing trade target 144.50, but we're in a 3 day cycle breakout longs. We talked about that. Maybe we will therefore get big sell-off on day three on the 3 day cycle. So that's if, let's say we do get a day two continuation trade, and therefore that's setting up for day three, the 3 day cycle for a blow off on Friday, a large capitulation of all of what's been building up this week. Alternatively, just sitting up high and consolidating as the market digests what's gone on, or whatever happens Thursday for a Friday, Tuesday setup, maybe. Who knows? We'll have to wait and see. And then on the other hand, maybe on the downside, we get a day two. On day two of the 3 day cycle, we get the day three breakout longs capitulating for a long squeeze. That may not be as aggressive a squeeze as we would get on Friday. Maybe we'll get the start of the squeeze being day two, and then the rest of the squeeze on Friday, which would probably occur lower down, high up. We get the squeeze maybe on tomorrow, maybe to half of the length of this week, and then moving back up for a stronger move down the following day. Right, on the Nasdaq, we are day three. Of the 3 day cycle. So let's find last week's day one. So this was day one here. So we got on Thursday we broke down breaking the low of last week. So that's last week. On Thursday, we broke the low. It was a fake, it was a false fake breakout, whatever you want to call it. It failed to break out and moved back in on the inside and closed above Wednesday's low. And so the day count starts day 1, day 2, day 3. All of this becomes one day. So all of this is day 3. So all of this is day 3. It starts to count again. It's day 1, day 2, day 3. So what can we expect on day 3? We can expect a reversal, a correction into 3-day cycles shorts. So we're looking for a correction up. So we're looking at this juncture, the highest, the lowest high before the low was up here on the hourly chart. Break this down, come into internal structure. And we can find classify this as structure here. Just about, you might get away with it. Okay. Move even further down, we might get a lower structural point. We argue that it's here with structure as well. Seems to be acting as structure, so we'll give that the label as well. Layering on top, so we've got this as structure. So we've broken structure, and we're now looking for prospects of a move up into shorts. So that's already broken. So that becomes a bullish counter trend line. Then over here, we have another potential trend line resistance that we need to break to really get traction if we are going to take on these called rush. So as soon as, even in Asia here, we may have a setup. So we've peak formation low, peak formation high, peak formation low. This is our new peak formation low. We're on day 3, so we're in anticipation. The bias is to buy dip, so dip, dip. So this is dip, so we're looking to long, looking to go long. We're on the backside of that trend, that mini trend on the 5-minute chart. We've broken the structure, we've come back in, testing support, broken highs. We're 5 minutes away from Tokyo Open. Will we get an engulfment? Maybe we'll get an engulfment and a move up for a scalp in the Tokyo Open. On the other hand, as we count down, maybe we're going to pull back into this order block, fill in the imbalance, stay in bid, buying low to move up in line with the thesis of the day 3 setup. US 30 then, day 3 for the move up from low of the week. Wednesday, so we're down towards the low of the week. Triple bottom for a move up, and see how we set up. Day 3 for S&P. Again, low of the week scenario for the long squeeze. Gold. Day 3 as well, I believe. That's the day count. So we sold off low of the week. Front side of the move. Day 1, day 2, day 3. 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 Day 3 for a move up. CAD. Day 1, day 2, day 3. Day 1, day 2, day 3. Day 1, day 2, day 3. Three levels of resistance over here. Very choppy price action in this box. You can break out of it one way or the other. Bias is to the downside, looking to sell high up within 3 levels of this range. And for the short. Sterling yen. Is a strong high. Same sort of scenario. Do the day count. Day 1, day 2, day 3. Day 1, day 2. This turns to day 1 because we were up high of the week, we failed. And again, we closed above Friday's high. So previous account. So as long as it's still in the markets, we'll start again. So day count. Day 1, day 2, day 3. Day 1, day 2, day 3. And day 1, day 2. Now day 1, day 2, we're looking for a continuation of the upside. But how many days of breakups have we got in the market? 1, 2. 2, so potential continuation for sterling yen. Interesting. For something that I'm biased on this, biased short, I'd have to say. But the day count is pointing for a day 2 continuation. Maybe we'll have a day 2 correction. Or perhaps we'll just be sideways. In that case, we'll have day 1, day 2, on day 3 on Friday. So day 1, day 2, and then on Friday. Perhaps on Friday we'll have maybe we'll get some sort of a move into these longs, move back into the range, nothing day, and maybe on Friday we'll break out, come back in, and then finally move to the downside on day 3 as part of the 3-day cycle. Shorts, squeezing the shorts, squeezing the longs, day 3, long squeeze, maybe. So I'm taking that off the watch list because it doesn't seem as if it's going to be as much of a setup. Can we looked at did we? Just double cat. What was the Swiss franc? Sorry, that isn't the watch list. Short. Day 3. CAD. Dollar CAD. One, day 2, 3. 1, day 2, day 3. This tends to be 1 because we want to close above Friday's highs. We close it back inside, so it's a fell breakout. Day 1, day 2, day 3. Day 3 was a seller high, so day 1, day 2, day 3. So is that the peak formation, breaking down structure, looking for a short? Day 3 short. Now, if we count how many days of breakouts we've got in the market, lots. 1, 2, 3, 4. Don't count that. 4, 5. There's a lot of length in this market, so potentially we're coming down heavily. Euro dollar. Day 3. Stops on the upside, maybe we'll come up to plummet. Maybe we're just going to plummet through those stops. Over here. This is broken structure. Structures attached, stops, highs. Dynamic support. Broken. Maybe more quiet. Still in front side of this move. This is the structure down here. why we've pretty much ignored that. So that's a potentially strong low. There's the high. So there's a box. So various box could be set up high to come low. Day 3, leaving stops in place. Or are we going to come up to the stops and sell off? So the bullish thesis for euro plays in, bearish thesis, day 3, from a long squeeze, falls into play with the bullish thesis, short squeeze in the dollar that we looked at earlier. Flip that round. Invert this shape. So we're in between this bottom information and top information. What's it going to be? So high up is going up upper third of the box. So really we want to be seeing something lower to come up. So that's what I have in the dollar. That's what I have in the euro. Cable. So cable day count, day 1, day 2, day 3, day 1, day 2, turn to day 1 because it failed, close above the highs, no it didn't. So it stays on day 2. What kind of day? Day 1, day 2, day 3. Right, day 1, day 2, day 3. Day 1, day 2 has failed, so it's been day 1, day 2, and now day 3. Day 3. And the peak formation is day 1, day 2. Peak formation here. Tricky one. Mixed signal, so maybe we'll come up high to come low. Maybe we'll come up for the stops, drag traders up into trend line, counter trend line resistance, plummet. Could be the scenario. Just mention that we've also got a first red day with the CAD came up hard, failed, closed lower, so that's adding to the thesis. Now euro yen, we've got 1, 2, 3 higher closes. 1, 2, 3. So 3 days of longs in the market. So 3 days of longs in the market is enough to presume that we're going to have a correction. It's day 2 of the 3-day cycle, so therefore it's not as convincing as if it were day 3, but we could still have a correction nonetheless, perhaps a correction to come up, and then on day 3 of the 3-day cycle, we can have an almighty blow off. So we'll leave that in for a scalp. That's day 2. So we're on day 2, 3-day cycle, number of longs in the market, 1, 2, 3 days of length in the market pretty much, and consolidating. Maybe this will be a strong high. We're going to have a move up into that strong high to test it, come down in line with the day 1, day 2 bias to the downside, and then perhaps popping up on day 3 from a mighty blow off into the length of the week. Aussie dollar, day 1, day 2. Day 2 failed to do anything in terms of the continuation, so we're at day 3, pretty much flat inside this box, not much going on, no bias either way. Perhaps we'll have a day 1, it turns into day 3, it turns into day 1 to target the upside, or maybe the continuation lower. So not really on the watch list, nothing really jumping out there. Aussie yen, prospects of the day 2 continuation in line with the topping formation. So that's a peak formation down low, peak formation down up high. Potentially volume trapped up top. Doing the fades are coming back up. Maybe we're going to plummet, continue lower, continue this, all this length down here. Time to tell. Stretching here. Stretch right here. So that was the last low, before the high, up and down market. So sell off. Two. So in this regard, perhaps we're coming up, just the peak formation out again. Day 2 bias on the downside for a short, and then we move up. So it's going to be pretty choppy sideways, and maybe day 3 will be the breakout of the range. Perhaps. Just a thesis, but this is showing the power of this day count, how it can help you put together an action plan, trade plan, preparing for what might occur. And we'll call that a wrap. There's plenty of pairs to be looking at. Got those on the watch list, setups. I divide them into their respective days. Dollar CAD, that's the highest confluence, given it's got a first red day as well as being on day 3. So put that at the top of the pack. So paying close attention. You've done very well on dollar CAD this week. Long may it continue. Okay, so good luck everyone. See you for US CPI.